welcome. You're watching Your Trades on ET Now. This is Priyanka Uppal along with me is Ankita Saxena today. Ankita, what a week! Despite the shaky global cues, Indian market stayed elevated whole this week. What a move from Bank Nifty. In fact, banking stocks put up the stellar show throughout the week. They've surged nearly 1,200 odd points this whole week on the banks. Bank Nifty was in fact 1.5% gainer for this week. But the main move, the real moves came from broader markets. Mid-cap, small-cap. Broader markets outperformed the benchmarks. Mid-cap index surged nearly 4%. Small-cap put up a show of 4.6%. PSU banks, private banks, they did come back and trade. Majorly because of the private banks, on the back of the Axis Bank earnings, but then PSU whole basket was up this whole week, and all this, Ankita, amid when FIs has been continuous sellers. So far, 30,000 crore of selling we've seen in April. We kick off the May series now. Let's see what is in store for us.
Absolutely, Priyanka. In fact, you mentioned how volatile the global markets have been. In fact, just yesterday, the US came out with its quarter one GDP numbers, and it was a bit of a party pooper because look at the numbers. We were expecting the GDP to moderate to around 2.4%, but there was a sharp, downbeat coming in on the GDP front at 1.6%. In the first quarter, there was some bad news coming in on the inflation front as well. With the inflation remaining elevated, the personal consumption expenditure price index, that's a key variable for the Federal Reserve for the rate cuts, actually rose 3.4% on an annualized pace for the quarter, and it was the biggest gain in this year. So not a very rosy picture coming in on the inflation front for the US, and we did see a sea of red across the US markets. Massive cuts on Dow Jones, 300 points, down 300 points. Nasdaq, of course, has been suffering from a downtick because of also the tech earnings. Was down 100 points yesterday. But one stock that was in focus, Priyanka, was Vodafone Idea and the AB group of stocks that were on a tear this week, and of course on the back of what happened with the Vodafone FPO that got oversubscribed, and a very overwhelming response that we got on that particular FPO. In fact, Kumar Mangalam Birla even said that this is a 2.0 round for Vodafone Idea. He also underlined that the AB group is committed to the telecom sector with a cumulative investment of 1,70,000 crore rupees. So a new lease of life for AB group and Vodafone Idea. In fact, the AB stocks were surging ahead. ABFRL, AB Capital both climbed more than 15% in this week, Priyanka.
Absolutely. In fact, and if we talk about the stellar earnings, the key earnings which came, of course, Nifty earnings. This was a Nifty heavy earnings week. Also, Reliance reported numbers this week. Nestle numbers came in. In fact, Tech Mahindra numbers came in. And then, of course, from the broader market. But the real show was put up by Tejas Network, which was nearly 32% surged this week post the numbers. In fact, a day prior only it started its move. And Axis Bank was a top Nifty gainer, surged around about 9%, all on because of the earnings impact. But then now what lies ahead for us? How should one trade the market ahead now? To give us more on the direction, we have Ashi Anand, founder and CEO from IME Strategies, Valcreate Investment Managers, and we have Rajesh Palviya to talk us about the index levels. Welcome, gentlemen. Good afternoon. Welcome to both of you. This is Priyanka. First, I would like to put a question to Ashi. Ashi, the kind of earnings that we've seen, Nifty earnings have come, and of course, globally also there's so much of focus on earnings right now. But then what should one expect? There was one view, one part of the argument was that a heavy earnings or the earnings which could put up a dismal picture like Reliance or maybe IT, those earnings have already gone by now. Look what it looks like now. Can we say the numbers which are yet to report now, the companies which are yet to report numbers now, the growth could moderate here, understanding that the major benefit of the benign commodity prices environment is largely captured?
So I think we're probably a little early in the earnings season to really judge too much in terms of how the earnings season is going. But broadly, if you just look at it, I don't think you can look at it as an overall broad brush. There are very clear divergent trends across sectors. So if you are looking at sectors such as real estate, capital goods, these are very, very buoyant. They're likely to continue to do very well. IT is weak. Banking, I think you are seeing a bit muted, not so much because of growth or asset quality, but because margins are under some level of pressure. Pharma is something that we're expecting to do reasonably kind of well. Consumption is another segment, and it's a very important part of the market, but consumption growth, I think, is clearly kind of subdued. So it's not really a market where earnings are same across the board. You are seeing very clear sectoral divergences. There are certain parts, certain sectors that have been doing well, that have been doing well for the past couple of sector quarters. That should continue. But there are also certain pockets that are clearly suffering.
Right. Hi, Rajesh, Ankita here joining in. Rajesh, tell us, this week, look at the rally in the banking space. The PSU banks were the top sectoral gainer, up 6.8%. Nifty Bank is up 1.5%, the biggest weekly gainer in 12 weeks. And the moves that have come in from Axis and SBI. Will banks really ride the rally going ahead?
Good afternoon. So yeah, definitely overall market structure is looking bullish, and the way broader market is behaving, we are optimistic on the up move of this market, and we expect that this rally can extend further in the coming week also, and possible we can see new all-time high also for the Nifty. If we go with the rollover data, yes, there is a subdued in the rollover action for Nifty as well as for the Bank Nifty. If we compare with the last 3 month average as well as with the 6 month average, the rollover action was low. That's why we are seeing Nifty and Bank Nifty was in consolidation for especially in the today's session. But overall stock specific action is clearly there in the market. The sectors which have already shown the breakout in recent past are continuously showing the buying interest. So we believe that some after some consolidation, Nifty may attempt to give breakout about 22,500. Once this breakout happens on the closing basis, then yes, possible rally can extend towards 22,750 to 22,800 on the Nifty. So buy on dips is the strategy for Nifty. Your stop loss should be placed at around 22,300. Even for the Bank Nifty, for the current week, Bank Nifty has formed a dozy kind of candlestick pattern. But overall, on the weekly chart, if we analyze the structure, Bank Nifty is moving in up sloping channel. That clearly shows that if there is a sustained buying interest in the Bank Nifty, and once Bank Nifty manages to cross above 48,500, 600 zone, then possible rally can extend to 49,500 also for Bank Nifty. So again, in the Bank Nifty also, buy on dip should be your strategy. Keep your stop loss at 47,800 to hold your long position. Yes, PSU Bank is looking very attractive. The way most of the PSU Bank have performed in the current week, that clearly shows the stock like SBI, Canara Bank, Bank of Baroda, Bank of India. These all stocks are looking very promising. These all stocks have managed to give breakout on the near-term structure, and so we can see a good amount of rally in PSU Bank in the coming week also.
All right, so PSU banks could ride the rally for the coming week also. We'll understand more on the front of sectors and his personal recommendations also. But then, Ashi, coming back to you, please help us understand how the macro environment can possibly pan out for the coming week. Understanding there is FOMC meet next week. And can there be some jitters from that front? Because the way GDP growth, it was a downbeat growth in US GDP. PCE data came in higher. The hopes for rate cut have been pushed to November now. Can there be some kind of disappointment, or maybe Indian markets can react next week? FOMC meet considering?
Yeah, sure. So if you're just looking at the global context, right, it is clearly worsened a bit, not very significantly, but it has worsened from where we were a couple of months back. We started the kind of year expecting 3 kind of rate cuts, and markets were quite confident of actually seeing that. And really, the whole call was how quickly are those rate cuts going to come in. What you have, however, seen is increased kind of flare-ups in the Middle East, pushing oil prices up. Inflation is clearly becoming more sticky than what is expected. And you are now moving to an environment where clearly rate cut expectations are being pushed backward. Like you indicated now, you probably may not see a rate cut until November. What you've also kind of seen is that economic growth, which was holding up reasonably well in the US, has finally started to falter. So you are kind of, I think from a global context, there's not a lot of tailwinds coming in from there. And this is kind of reflected in relatively weak FI flows. However, it's important to understand that for the last some amount of time, the Indian markets have pretty much been charting our own course. We haven't really been impacted too much by kind of what's happening globally. This can be seen by the strength in the market over the past few months, and FI flows haven't really been very supportive over this period either. So I think from a global context, don't really expect anything too positive in the coming week. Possibly some level of disappointments, but I don't necessarily see that having a negative fall through for the Indian markets.
Right. Rajesh, I'll come to you then. The first session of May series, we ended the day in the red. What does the rollover for April look like? How do you expect the May series to pan out going ahead?
Yeah, so Nifty and Bank Nifty rollover was below to the 3 month, 6 month averages. But if we look at the broader market rollover, that is in line with the previous month, and that is showing that stock specific rollover action was in line with the previous expiry. The way rollover data is now suggesting that most of the sector like oil and gas, infrastructure, real estate, power, metal, these all sector have attracted the higher rollover compared to the previous month. So I think these all sector may exhibit a good amount of rally in the coming series. For May series, yes, we are projecting range for the Nifty towards 22,100 to 23,000. That's the range we are expecting for May series on the Nifty. And for Bank Nifty, we are projecting range towards 47,200 on the downside, and on the higher side, 49,600 for Bank Nifty with the positive bias, as the most of the stocks, most of the sectors have shown good traction in terms of rollover activity, and the sectors which are already shown a breakout in last couple of week, that are clearly in the bullish trajectory only, and the broader market is also in the bullish direction. So we expect that May series may also continue upward direction, and possibly we could see a new all-time high also in the May series itself.
All-time high can be expected in May series. That's what Rajesh is learning from the current levels of markets. Gentlemen, stay with us. We stay for a short break. More to come once we come back.
Welcome back. You're tuned into Your Trades with me, Ankita Saxena, and with me is Priyanka Palviya. Welcome back, gentlemen. Welcome back to Your Trades. We'll continue with all the questions and answers. But Ashi, I'll come to you now. We'll talk about the stock of the week, Vodafone Idea. What an overwhelming response from both foreign and Indian investors. This post, the listing of Vodafone Idea with a premium of a good 9%, we did see other telecom stocks also move up, and telecom sector was on a tear this week. Do you think this is going to be the long-term trend?
So I'm not really sure about that, right? Because if you just look at the implications of what the Vodafone FPO really mean for the sector, until Vodafone hadn't raised this capital, there were kind of general concerns around the longer term sustainability or survival of Vodafone itself, which could technically have taken what is currently a three-player market and made it a two-player market, which is kind of positive longer term for business economics of the surviving players. With Vodafone having actually now raised this capital, Vodafone survival is that much more intact. And therefore, the kind of chances, it is going to remain a three-player market over the longer term. More competition is not very great from a pricing perspective. So I'm not really sure whether the Vodafone FPO is necessarily positive for other telecom stocks. And honestly, a bit surprised to see them move up because of this move.
It will be an interesting trend to watch out for, though Kumar Mangalam Birla is very confident of revival of Vodafone. In fact, he calls it Vodafone 2.0. But then coming to you, Rajesh. Rajesh, the kind of move we saw from broader markets, mid-cap, small-cap, both outperformed the benchmarks. What do you make out? Which can be the stocks which can perform very well coming week also? The stocks that has made it to your radar?
So I think metal is a space where one can focus at this juncture. Vedanta is looking very promising. The way stock, this is the fourth consecutive week where stock is making higher high-low formation. The way stock has formed a long built-up on the derivative data, rollover action was around 95-96%. So we believe that Vedanta can continue furthermore upside, and we are positive on the stock. Positionally, our target is higher around 480 to 490, but for trading perspective, one can buy Vedanta for upside target of 425 to 430, keep its stop loss of around 390. The second stock that we like is GMR Infra. Stock managed to give breakout of last 3-week consolidation range. Long built up was there in data. rollover action was around 96%. The kind of breakout which we are witnessing on the daily chart as well as on the weekly chart, we expect that GMR Infra can continue for the more upside towards 96 to 98. One can buy GMR Airport for upside for with stop loss of 88. And the third stock is from the cash segment, that is Hudco. A very strong breakout of last 12-week consolidation range. The way stock has broken out, we believe that now Hudco may exhibit good amount of rally in coming week towards 245 to 250. Hudco can be a buy with stop loss of 220.
All right, gentlemen, Rajesh, Ashi, thank you guys so much for your time. Thank you so much for joining us on this show. We will let you go on that note. But moving on, the IT players have had a rather rough quarter gone by. But what is the road ahead for the businesses? Well, let's hear out the word from the managements of Tech Mahindra, L&T Tech, and Emphasis.
Let's talk about growth first. So if you look at growth over a period from FY25 to 27, our view is that as we get to FY27, based on the investments and the strategy that Mohit laid out, we'll be growing above peer average based on the positioning we'll be able to do from a company perspective. Although when you break it down between 25, 26, 27, our view is that next year is going to be from an industry average, a moderate year, and increasing incrementally each year as we move forward.
With all the political uncertainty, with inflation rates where they are, and industry where it is right now, I am actually very happy to share the 8 to 10% guidance, because I do believe that this is something we will definitely be able to do.
FY25 will be a growth year, and we do expect to deliver better than above market growth. So that really means on a relative basis, if the broad NASSCOM growth ends up being in low to mid single digits, then we should definitely grow faster than that. It's hard to pin a number because we typically don't provide a number guidance for the revenue side. Margin, we give a pretty strong guidance, which Manish just talked about, 14.6 to 16%. I think there is, as I mentioned, green shoots. We've called out bottoming of many businesses in the last couple of quarters. We've seen recovery come back in banking. We've had 2 quarters of sequential growth.
And well, it's time to wind down on this edition of Your Trades. Priyanka and I will take your leave. Thank you so much for tuning in.
Right, and now we have Maruti numbers coming in. Maruti numbers revenue, which stands at 38,235 crore. The poll was that is it is in line with what we had estimated already. No wonder that is why the stock was not reacting much. In fact, it was down 0.5%, 1.5% today. EBITDA comes in at 4685 crore. The estimation was 4958 crore. Well, EBITDA is much lower than what the estimation was, and in fact, margin is also 12.2%. The poll was 13%. No matter, the street had already reacted on the numbers. In fact, most of it was already priced in. Srishti is there on the phone line with us, who widely covers the auto sector. Srishti, on the face of it, disappointing numbers because the margins have also shrinked, EBITDA also shrinked.
Well, yes, actually a mixed set of numbers coming in from Maruti Suzuki, because this time around, though the revenue has been in line to what we were expecting, but there's a big miss onto the EBITDA as well as the margin figure. But if you look at the profit figure, that has actually come in above to what we were expecting. If I talk about the numbers then onto the revenue front, we have seen 38,235 crores is what the company has clocked in. Profit at 3,878 crores. And if we talk about the margins of the company, actually we were penciling in margins of close to 13%, but the margin figure has come in at 12.2% is what the company has clocked in. And even for the EBITDA number, 4,685 crores is what the company has clocked in, and this is a little lower to our expectation of close to 5,000 crores. Onto the number front, what I'm actually getting to see is that no significant jump otherwise, but their other expenses have seen a jump up to 4,950 crores versus 4,126 crores in the same quarter last year. And other than that, all in all, their finance cost has also increased to 76 crores this time around, but not a significant significant jump up over there. So the other expenses part, I believe, is something that has actually inched up. The EBITDA that has actually impacted the EBITDA number, and along with that the total tax expense is actually at 1120 crores, where this number was actually 631 crores in the same quarter last year. So two factors on the top of it I could highlight is that higher cost of finance. Other than that, if I talk about higher other expenses and higher tax expenses are some of the factors which could have impacted the operational number for Maruti Suzuki. But other than that, if we look at the profit figure, then the company has done quite well.
All right. So what could have impacted the margins and the EBITDA came in lower? Let's try to find in. Thanks very much, Srishti. Now we have Naveen Kulkarni, also Chief Investment Officer from Axis Securities. Naveen, hi. Your first reaction on numbers was EBITDA came in at lower figures. What possibly Srishti was indicated that could be a higher tax figure which could have impacted. What is your first reaction?
Yeah, so when I look at the numbers, what I can sense is that we were expecting margins in the range of around 13%. They have delivered around 12.2%. Also, I would say that the revenue numbers, I can see that probably the revenue numbers are around 300 to 400 crores lower. So it could mean that probably there was a higher amount of discounting in this quarter, and also probably marketing expenses were slightly higher. So that could have impacted the EBITDA numbers. We need to see if there are any one-time items which would have impacted the numbers in this quarter, because overall the expectation was that in this quarter the volume numbers were decent, and moreover because of the premiumization trend and vehicles with the higher per unit value were being sold. So expectations were that the margins would be stronger, right? So from that perspective, expectations were in the range of around 13%. But probably we see that it could be discounting and probably higher marketing expenses, which could be the key factors for the lower margins. We need to get into details of the other expenses a bit more to understand this lower margins better.
One possible reason could be what Naveen is also indicating is that higher marketing expense. But then more details will follow up. Of course, we'll update our viewers with the same. Thanks very much, Naveen, for your reaction and time and review on the Maruti numbers. The Maruti numbers, what we were expecting was that higher UV sales should have aided the EBITDA margin expansion, and margin expansion was expected 200 odd points, 200 BPS. But then let's see more detail as and when more details follow up. We will get you the latest update on Maruti numbers also. Well, that's all in this edition of News Bulletin. Stay tuned to ET Now for more updates. Thanks for watching.
If you like this video, then like, share and subscribe to ET Now.